Welcome.
This is another episode of the Defenders of Business Value podcast, a podcast where we talk about what makes a business valuable, learn the tips and tactics to increase your company's value that only veteran deal makers know. And now, here's your host, Ed Mysogland.
Welcome to another edition of the Defenders of Business Value podcast. I'm your host, Ed Mysogland. And today we're talking about CIMs. And CIMs, it's CIM, it stands for Confidential Information Memorandum. And that is the primary document that buyers review from sellers that has their information, information about the business. And that CIM, and other people call it confidential business review. Others call it the pitch book, the book, prospectus. But for our purposes, we're just going to call it a CIM. And the purpose of the CIM is to provide a comprehensive, confidential, well-structured document that facilitates, information about the business that prospective buyers are going to want to know, all the while protecting the seller's proprietary and sensitive information. So this thing is, it's one of two documents that drive the sale for anybody in the deal space. So the first one is a teaser and the second one is the CIM. And the CIM, it's intended. Now, let's talk about its purposes. So one, it's confidentiality. All right. So as the name suggests, the CIM is designed to maintain confidentiality. It's the first introduction of the business to the buyer. And that CIM should answer 75 to 80% of any normal buyer's questions. And we already know, anybody that's been in the business for any period of time knows just kind of the standard questions. And then every business is unique, and those additional 20, 25%, need to be augmented. Okay. So it has some, but not all information. This is not intended to be due diligence. It's intended to be pre-due diligence. So it's going to have enough information about the business to help them establish a value, and B, whether or not this is a viable candidate for acquisition. The next thing, it's a marketing tool. All right, a well done and comprehensive CIM will help the buyer accelerate the purchase process, and it will demonstrate, your command of the business. We have certainly seen that a well-prepared CIM can make a business more appealing to buyers by highlighting the strengths and opportunities and competitive advantages. So a well-done document actually helps the sale and helps accelerate the sale. And then lastly, it helps with pre-negotiations. All right. So the CIM can form, initial information that the buyer and seller are going to refer to during their interaction. And this will help streamline the negotiation process. And so that's why it's so important to have, good, clean financial statements as well as accurate information. So the, so it facilitates the negotiation, further down the process road. All right. And then lastly, I want you to remember, time kills all deals. If this document is well prepared, it will save you a massive amount of time. Okay. So now let's talk about what all the CIM contains. So it has an executive summary. It has a business overview, industry information, operational overview, financial information, customer information, marketing, human resources, technology, growth opportunities, assets included in the sale. At times there are, this is kind of an optional one, the terms of the deal. What kind of transaction are you looking for? And then lastly, an appendices that have the supporting information. All right, so let's begin with the executive summary. So the executive summary is really super easy. It's how would you describe your business to to some to someone you just met, and you want to talk about, its track record, financial performance, operational foundation. I mean, it's really just an introduction, like a high level overview of your business. It is truly that simple. So then we move into the business overview. All right, and you want to talk about the first thing is the founding story. How did you get into it? If you bought it or if you started it, and when did you start it? And if you acquired it, describe why you bought it and the history from the time before you bought it till the time till now, and any particular milestones. That's the next thing is the milestones of achievements of the business. And maybe you're saying, well, it doesn't, for me, it's no big deal. We don't really have milestones. Well, every business, there's certain things that you remember about your business, and I think you should include that. So some of the milestones that I think you should include would be, something that happened that considerably grew the business. I would include when it was founded. If you have any particular products or services or new products or services you introduced, I would put that. Any key customer wins or significant contracts, I would, if you expanded into new markets or into new geographic regions, if you've ever received any awards or recognitions, if you've had any acquisitions or merged any companies in with yours, and then any kind of innovations that you might have. I would then talk about your market. And so, I think any buyer wants to kind of understand what the market trends are. So if you're aware of any market trends that are going on, because the buyer will find out, I think it's important to put that out. Any strategic shifts in the business? Has the business model always been the same? Have you always offered the same product or service? Are you still targeting the same type of customers? Then we move into an overview of leadership and personnel changes. Who runs the day to day? Are there any key hires that made a favorable impact on the business? Have you reduced any personnel? The technology is displacing some people. If so, what does that look like? Have you had any acquisitions or partnerships? Just the rationale behind them and the outcomes that they achieved. Any kind of technology. I would discuss any kind of commitment to technology and innovation that you've made, and if there's anything proprietary within your business, you certainly want to talk about it. I'd also talk about brand reputation. Does the company's reputation, and standing in the industry, what does it look like? Because again, buyers will find out. And then lastly, or the last couple things, has it always been in the present form? Like, for example, some people change from, a C Corp to an S Corp, or from an LLC to an S, what has it always been in this form? And then the last question is, what have you failed to do? That you got into this business, what had you hoped to do that perhaps you hadn't done? All right, let's go to the industry review. So when you're evaluating an industry, you have to establish, who do you serve? What's going on in the industry, and you can find that through IBIS World or your public library. There's a lot that, as well as trade magazines. So I think a general statement of this is the state of the industry. Are you in a growing industry or a maturing industry? Or is it new? And, it's kind of a big land grab, but you want to address kind of the state of the industry. And you may say, look, I don't know what the state of the industry is. And I understand that, but I do think that you have a lot more understanding than the buyer does. And so if you're following any kind of trade magazines, or industry intelligence, you definitely want to include that. So you want to talk about, just the growth of the industry, because again, remember, business valuation is about growth. So if you're in a dying industry, we may have to consider how we're going to market this given the declining of the industry. Do we have enough time for us to get our money out? And that may not be a good thing. So you do want to get your arms around that. And I'll list some sources that you can go to kind of get a clearer understanding of your industry. All right. So now let's talk about an operational overview. All right. This area, the buyer wants to understand at a high level what you do and how you do it. All right. You don't want to give away any trade secrets or anything like that, but they do want to understand, how the business operates. So we'll first begin with an outline of the operation. All right. Any kind of key stages or key steps that you do to deliver your products or services, that's what they want to do. And you can easily just put this on a piece of paper and draw out, this is step by step by step. And next is operational structure. You want to describe the organization structure in the business. What's the hierarchy? This is essentially an organizational chart. And we'll talk more about that in the employee section, but operational structure, who's responsible for what in the process. If you have inventory, you want to talk about your inventory management. How do you manage the inventory, including ordering and restocking procedures? Next, you want to talk about your supplier relationships. All right. Who are they? Is there a lot of them? Are there alternatives versus what you currently have? That's a big issue. A concentration of one supplier without the prospect of additional ones increases risk and decreases your value. So you want to highlight any kind of supplier relationships that, that are diversified in nature, as well as, if there's any cost savings measures or exclusive supplier partnerships, you want to talk about that. Next, you want to talk about quality control. How do you control your quality? What's the oversight? Is there anybody paying attention to what's going out the door? Because a buyer will want to identify if there's any kind of efficiencies that could immediately be implemented to improve the cash flow margins. The next thing is cost controls. What do you do in order to control costs? How do you have mechanisms in mind or in the business that will help the buyer understand through your financial statements, where are the controls, and is there opportunities to further control the costs to improve the margin? Next, we want to talk about KPIs. KPIs are key performance indicators. If you have any kind of KPI in your business, a lot of people are like, look, Ed, I just, if we have a profit at the end of the month, that's my KPI. I get it. But some are looking at leads, some are looking at funnels, some are looking at, just how many leads are coming through the door, what's their Google ad spend, different things like that. There's KPIs for every business, whether you know it or not. But whatever you're paying attention to in your business, you want to share it with the buyer because they want to pay attention to it too. Next, under operational overview, you want to highlight the scalability and growth potential. Like I've said it 100 times, business valuation is about growth. So if you can lead the buyer to water, this is how you would grow this business, that will help. You want to address any kind of competitive advantages you have from an operational standpoint, whether it's costs, whether it's superior technology or unique capabilities, you want to describe those. And then lastly, you want to talk about operational challenges. If there's any kind of challenges that you've experienced, beyond just the day-to-day of being a business owner, you want to share that with the buyer. All right, next we're going to move into financial analysis. Every buyer is going to spend a lot of time here. So you want to include your historical financial statements. So this includes your income statement and balance sheet and a seller's cash flow analysis. And we'll talk about the valuation here shortly, as far as how to calculate seller's discretionary cash flow. All right. You want to include your interim financial statements. The buyer will consistently ask for this. If it ends the month, whenever you close out a month, you want to supplement your CIM with the most current information you have. And if it's over a year end, just anticipate that the buyer is going to want to see your year ends as soon as they're available and tax return as soon as that's available. In QuickBooks, you can do a year-to-year comparison. If you have that ability, that's a really good way to highlight what's going on. Detailed revenue breakdown. What are your revenue streams? Super easy. In QuickBooks, it's very easy to identify. What's the revenue and what does it comprise of? Is product, service, combination of both, but you just want to break that down. And then expense analysis. All right. What you want to highlight any kind of major components, and then the typical ones are cost of goods sold, payroll, and rent. And if there's any forthcoming changes in those expenses, you want to establish working capital. Every business, there's two checks that when you acquire a business, the first check is to buy it. Second one's for the working capital. In this case, we need to have a clear understanding of what does it take to actually run this business. Next, we want to have our EBITDA. So earnings before interest, taxes, depreciation, and amortization, and our adjusted EBITDA. And again, we're going to talk about that here shortly, but for the most part, everybody wants to know how am I going to pay myself, pay any kind of debt, and get a return of it on my investment. And doing that analysis will guide you to that. Next is CapEx. CapEx stands for capital expenditures. You want to include, how much do you have to put into the business in order to keep the equipment running optimally. Like, for example, we have an equipment rental business. Well, their cash flow is a couple $1 million, but each year they're having to put tons of money into the equipment. So the depreciation expense that they're taking is really not depreciation. It's deterioration. So we back that out, and we don't include that in our cash flow analysis because we know that that's just a tax thing. We have to go back and continue to reinvest into the equipment if we're going to continue to sell it. And then, if you have any understanding of financial risks meaning, customer concentrations, market volatility, any kind of regulatory changes, you want to share those. And then, like the last section, if you know of any growth or strategy that, that the buyers should entertain, this is a good place to start, and share that. Okay, so the initial information that we just discussed, I mean, everybody seems to understand why. That certainly buyers are going to want to talk about financials and things like that, and how the business works and so on and so forth. Now where we're going from here, like customer analysis, this is where we're going to begin. I mean, that is really important, and you're going to say, well, that's kind of invasive into the business. And it's true, but I want to kind of walk through some questions that the buyer likely will be asking of you, and why, and then its impact on value and how you can prepare. All right. So customer demographics, so who is the customer base? Can you provide any kind of segmentation information? Where are they located, who they are, just what do they look like? What's the avatar? What are the demographics? Was the geography? How do you collect data? So then why are buyers asking that? Well, they want to try to assess, the market and the scope of how wide is your net as it relates to obtaining customers. So its impact on value is that, the more diversified customer base, whether it be in type of customer, geography, the size, the less, or I should say, the greater favorable impact on value. And then how do you prepare? Well, you're going to have to understand, your customer and where they come from. Next, let's talk about customer base and loyalty. So who are their key customers? How are they diversified? And, is there a retention rate? Some people call that churn. How many customer, you're replacing customers as you're losing them. What is that churn rate? And do you have any kind of long-term contracts? So buyers want to know this because having a predictability, so stability and predictability are keys to keeping business value high. All right. So a loyal and diverse customer base will considerably increase the business's value because it lowers the risk and you have stable earnings. So again, back to the same thing. The more predictable, the less risk. The less risk, the higher the value. How do you prepare? You need to have your arms around, where your customers are coming from and who they are. So next, let's talk about revenue sources. So what is the primary sources of revenue? Are they, if you have multiple services, is there a service that leads the way? How does that look? And then buyers are going to want to understand, the consistency of these revenue streams and what's the likelihood that they're going to continue to be as they historically have been. So the impact on value is that consistent and diverse revenue streams can lead to a higher valuation. And then how do you prepare? Your financial statement, you should be ready with some financial statements that breaks down your revenue, where it's coming from. All right. Next is market position. So, how does your business stand in comparison to the market? What makes you different? So buyers want to understand your position because it helps them understand the current market share, your competitive advantage, and where they're going to be able to go in order to grow the business. So a strong market position as it relates to value is a clear competitive advantage and will increase the value of the business. Understanding who your customer is and why they come to you increases business value. Next, let's talk about customer satisfaction. So questions are, how do you measure customer satisfaction? And do you have any kind of examples? So why buyers want to know, they are undoubtedly looking at Google reviews, and looking you up on the internet. So customer satisfaction directly indicates the business service quality. All right. And everybody has bad reviews. I mean, zero question about that. So periodically, you need to be in a position to answer, what led to that poor review. So you just want to get your arms around, what's being said about you on the internet. So next, let's talk about the relationships. So what key business relationships and partnerships do you have? If you have these relationships and partnerships, what's the likelihood that they're going to transfer to the buyer? it becomes really, really important for the buyer to be able to assume those types of relationships. So if they're tied to the business owner, that's going to impair the value a little bit. So how do you prepare? You're going to want to detail any kind of partnerships or relationships that bring value to the business, such as suppliers, distributors, or industry collaborators. So any kind of customer challenge, challenges and risks, the biggest challenge that you have is alternatives. Where else can your buyer get the service that you product or service that you provide? And the buyers want to understand that. What's the likelihood that you're a flight risk, and where are you going, and how do I retain you? And so the ability to understand why a buyer continues to work with you will reduce the impact, any kind of impact on value. And then preparation, you just got to be honest about the challenges that you experience. I mean, every business has it, so you might as well be honest about it. And because, again, the buyer will find out. So now future growth opportunities, how does the business grow? How are they going to either, how does the buyer either expand its customer list, sell more to its current customers, or attract new customers? Therein lies the whole, the cornerstone to all of these questions is growth of the customer. How do I do that? And so understanding all of that will certainly help you increase the value of the business, or at least maintain the value. If the more you understand your customer, the more you understand how the buyer might be able to capitalize on the customer base or grow it, the greater the likelihood that you're going to get a premium value. So again, this is all about risk. The buyer will never buy a business if they don't understand the customers and why they do business with you. It's just too much of a risk. So this is a real important one. All right, next let's talk about marketing. So, we get a lot of pushback on this. I mean, it shouldn't be too difficult. I mean, a buyer wants to know what you're using for marketing. So what's your collateral? When I say collateral, print information, digital collateral, websites, email templates, sales collateral. What are your leave behinds? If you have scripts, promotional collateral, posters, banners, and such, branding. What logos do you use, in typography and colors and brand identity? They want to understand the like with customers, they also want to understand the revenue breakdown. When you create a sale, where is it coming from, and what does it look like? What has it looked like over the last several years? Is there, can you break down the revenue by source of revenue? That's really important. Is there any seasonality to it? Sales and marketing want to, again, like the last section, talk about, understand where who the customer, who the customer base is, and why. Is there any kind of concentration? Do you have any kind of KPIs and the like? Sales channels, describe your sales channels and strategy, which include your sales team structure and performance metrics. How do you reach your customers? That's the main thing. Is how does your business work? Your marketing strategy. And again, by the way, some of this you do not have to pony up. I mean, it's not like you're not going to sell. At some point, we can phase this type of information out to the buyer, because you might be sitting here saying, I'm giving up the entire, everything about my business, and I don't know if I have a deal. And that's true. So some of this stuff, we want to be sensitive that we're not giving away any kind of proprietary information that would give a potential buyer a competitive advantage if they went out and opened a shop or bought another business like yours. All right, back to this. We also want to know the tech stack. on sales and marketing, what are you using? What platforms are you using to generate, to house the information? What CRMs and such? What email marketing service do you use? Things to that effect that generate marketing and sales. Then we talk about reviews. We want to talk, like I said in the last one, you want to know what's being said about you on the internet. Whether it's right, wrong, or indifferent, you do need to at least know what's going on out there, because the buyer is going to certainly get their arms around it and want to know why did you get that 1-star review. So that is marketing and sales. Okay, this next section is about people, human resources, and this is probably the most sensitive information. We talk about customers, and customers indeed are sensitive, but as far as employees, you want to make, first and foremost, is sanitize. When I say sanitize, that means no names of anybody that's in the business. And same thing with customers. You just use industry. Like, for example, like in our community, there's a large pharmaceutical called Eli Lilly. Well, you can say, public pharmaceutical company, it may be Lilly, it may be 100 others that are public companies. All right. So back to human resources. Everybody's going to want to know about people. And so when we talk about it, let's talk about, the potential questions like, what kind of skills and experience are required to work at your business? All right. Do you have any kind of turnover? What's the likelihood? Where do you find people? Are there any key employees, and what are their roles? How do you keep them? How is how is employee morale? And what is the culture like? Is it a eat what you kill kind of environment? Or is there, is it one for all for one kind of environment? Any kind of employee related, legal challenges, meaning has anybody sued you for wrongful termination or things like that? And then what's the salary structure? So why do buyers want to know that? Well, they want to figure out, they're trying to assess the skill and stability of the workforce. If I have to go get more people, where am I going to find them? They want to understand the key personnel. So when you leave, who is going to run the business? Who are these key people that might either be developed up into another level of management, or who are these people that, might be flight risks? All right. Is there a cultural fit? You want to understand, do you have a particular culture? Like, there's companies that we've seen where, that company is really a family, and, some have family members, and that's true, but others, they've worked together for a long time. So this is going to be quite a transition, and, you need to understand how will you fit into that culture? The buyer's going to want to know that. Do you have any kind of, every buyer wants to know about the legal liabilities and what's the ramifications and any other financial obligations, associated with the workforce. So now, impact on value. When we talk about that, when the employee expertise and stability, again, high turnover will certainly suggest a lower multiple because it's higher risk. Do you have any kind of key employee that you're dependent on? Is there any kind of reputational risks? As we talked in the last couple sections, is that you want to perhaps, make sure that you understand what's being said about you on the internet. And then lastly, any other financial commitments that you need that the buyer would want to be aware of. So how do you prepare? Well, first thing you want to do is have an org chart. Here's everybody in the company. Here's kind of the how they all stack up. Your employee documentation. If you have payroll records, you want to keep those handy because at some point you would You would like to be able to furnish them in a timely fashion to the buyer at the appropriate time. You want to, if you do have high turnover rates, you want to, address why. You want to be in a position that it may be the nature, but here's how we solve this problem. If you have, comp and benefits, if you've done any market analysis, this is, here's kind of where we sit as compared to our competition. And then you want to communicate, if you do have a culture, how does it contribute to the company's success? Next, you want to talk about, training and development. Are you helping your employees get better? And if necessary, do you talk about health and safety? Do you any kind of plans that are in place? So that's about the about employees. Now, let's talk about you. Like, if you are the business, the buyer wants to talk and understand about, that the business is going to continue to operate or without you. So the customer, they want to understand how dependent you are from an operational standpoint, from a customer standpoint, from an employee standpoint, from a supplier standpoint, and from leadership. If you're that person on all those fronts, the risk is fairly high to the buyer because you're in all those roles. So what questions will the buyer ask? Describe your day-to-day operations. How do your customers perceive your role? Have you ever taken any kind of extended absence or vacation or something more than just a week? Who are the key relationships in the business? And then can you describe any kind of any strategic business decisions that are being made without you? And so how do you mitigate that risk? You need that strong second tier management, and you may not have it, and that's okay. But if you do have the time to address some of these things, I would suggest that you do it. If you can systematize the operations so that the buyer understands how the business operates as a system, that would be helpful. Transitioning any kind of relationships from you to the next a key person on your staff. That's really important. And then you need a detailed transition plan. You need that plan regardless. If something does happen to you, what are you going to do with the business? So that's a certainly an important one. And there's more. I mean, we're trying to address every issue that the buyer may ask you, but each buyer differs. So anticipate, I'm certain we hit probably 80% of them, but anticipate there'll be more. All right. So now let's talk about technology. So potential questions from the buyers are, what kind of technology do you use? They want to know, the biggest thing is if you have proprietary technology, and that's either really good or really bad. So if it's really good, if you're able to, if you have proprietary technology that makes your business hum along, that's great. The question is, what happens when it stops? Does the whole business fall apart? And a lot of businesses that we work with, that is indeed the case. So if you're using, some off the shelf, perhaps customized a little bit, that's not a bad thing. That actually helps the buyer, because they can capitalize on what you're doing with off the shelf, products. So next is how integral is your technology to the business? If you're like any business like mine, technology is really important. What's the state of your online presence? Everybody wants to know what do you look like, not only in the marketplace, in real life, but also digitally. Next is, how do you handle security and privacy? And is the technology that you're using can be scaled? Meaning, can it grow quickly? So how do you prepare? You just need, number one, you need to document your technology. If you do have, you do have to invest in technology. So if you have an antiquated system, like an antiquated database, like in my case, like we do, it works, and the pain associated with leaving, I know. But as far as, would somebody, like if someone was looking at our business, would they find it attractive given the platform we use? I'm going to say we're probably going to experience somewhat of a penalty. So you want to optimize your online presence. You want to make sure that you're protecting data. You do want to understand you do want to understand how technology works in your business. Not that it's just part of the business, but how does it work? Having thought through all those areas of technology, the buyer likely is going to pick up right where you left off, unless it's a large buyer, and then they'll probably assimilate your tech into theirs. But regardless, having an understanding of how it works will certainly mitigate that risk. The next section is talking about growth. Every business owner, or every business buyer, I should say, is going to want to know not just what the business is today, but what can it be in the future? What's the likelihood it can grow to be bigger and more profitable than it is today? And so when you're talking to the buyer, you need to, and maybe you understand this and maybe you don't. I have no idea, but you do want to, if you do understand it, you need to be able to communicate that, how would you expand the market? What product or service innovation would you undertake to increase the business? What kind of customer base diversification, should you be doing right now? And the next is, layering on new technology. Would that help? Is that the growth that we're talking about? And then lastly, are there partnerships that can be established that we want to, that would help grow the business? And so you want to get your arms around that, because, they're going to do their own research, but if you can share some of the tools and resources that you have at your fingertips about, this is how I would grow my business if I had another 10 years, I think that would be very helpful to the buyer. All right, next we're going to talk about the asset list. Every buyer wants to know, what am I buying? So quite frankly, this is super easy. You want to create a spreadsheet, or create a table. You can even handwrite it. You want to include the make, model, year of manufacture, and any unique attachments, features, or capabilities of that piece of equipment. You want to establish what kind of condition it is, and don't say it's like new when it's probably in fair condition. You want to be honest of its condition, because chances are there's going to be an equipment appraiser that's going to come along and size it up. You want to also talk about, are there any kind of maintenance and repair records that you have, that, especially for those that are in manufacturing or trucking, for example, that these things become really, really important. Any kind of replacement or upgrade history, in a lot of trucking companies, the engines have been, totally redone, and it adds life to the asset. So you want to be able to talk about that. And then, is there any kind of, what kind of, lifespan remains on the current equipment. And by just saying, if you take care of it, it'll run forever, is probably not the answer that any buyer wants. So you want to be able to, what this buyer is trying to figure out is, okay, if I buy the business today, how long before I have to start reinvesting in equipment in order to keep it running? That's the ultimate question. As far as the detail of, here's the listing of my equipment. Every buyer's going to need that from an asset sales standpoint, as well as any kind of bank to establish their collateral. All right. Lastly, tours of the business. You want to make sure that on this that you talk about how a buyer will see the business. You can do it over Zoom. You could get a lot of these questions answered, but at some point they're going to want to come and see the business. So you might as well address it in advance how this is going to work. So at first, you need at least a couple days notice before anybody's going to come visit. You need to establish when they're coming to visit. All right, the time. Is it going to be after hours? Is it going to be during working, during the workday? The next thing is check in. Who are you going to meet with? Are you going to meet with the business owner, or who are they going to meet with? And the biggest thing is, you just don't show up at the front desk and say, I'm here to look at the facility kind of thing. That's what you're trying to avoid. The next thing is time limit. It should, you can walk the floor of most businesses within an hour, and that it's only for the buyer to see it, not necessarily to stay and ask a bunch of questions. Next is the buyer should understand that there's no disruptions. You're not there to disrupt anyone or anything. The dress code, you want the buyer to understand that, if it's, everybody in your place is wearing jeans and a company t-shirt, that's one thing. Showing up in a suit is going to do nothing but draw attention to them. So have them dress appropriately. Number 6 is, again, this confidentiality is really important. So make sure everybody understands that we're not going to be talking about sensitive information about the sale of the business here on the floor or anywhere where an employee or a customer can hear. Next is employee interaction. Absolutely no. You're not going to interact with employees unless the seller says so. And again, this is about observation only. So refrain from interfering with day-to-day operations. And then lastly, don't take pictures. You want to make sure that they're not going to take pictures or record anything without your permission. So that is the tours of the business. And then the last section is super easy, is a frequently asked questions. So as a seller, you're going to hear the same question over and over and over and over again. So why not just cut to the chase and create a section of questions and answers that you consistently continue to hear. And then that'll do it. That's a CIM. That's how you create one, and that is what you should expect from one. So I hope you enjoyed this episode of Defenders of Business Value, and we'll see you next week.
This was another episode of the Defenders of Business Value podcast. For more episodes packed with strategies to increase the value of your business, visit defendersofbusinessvalue.com for show notes, transcripts, and free tools to start you on your journey. Subscribe now so you don't miss any future episodes.